Let's talk Pfizer. We've called it our chart of the day today because Starboard Value has a $1 billion stake, we've confirmed. The network has. Brian, you have this stock too. You know, it's funny. Josh Brown at times has called this, at one point he called it the best looking stock in the market. And I think there was a lot more optimism about the performance here that hasn't necessarily materialized, to say the least, because it's done next to nothing year to date. Why?
Yep. Well, there's a couple of reasons. Number one, I still think it's suffering from the COVID hangover. I really do. And they've had some problems from an operational perspective. And you get better performance from a drug perspective, especially in areas like Lilly or Regeneron or even big dividend players like AbbVie and Amgen. And so we sold Pfizer 2 or 3 years ago in our tactical, but we started to buy it again in our value and dividend growth, principally because the stock is beat up. Now you've seen the Starboard value come in. It's approximating and backing up what we're seeing in terms of value. In a healthcare sector, by the way, Scott, that's 15% of the market. You got to be careful in terms of your healthcare positions. And I think you have to play the value and dividend growth play here on Pfizer as a turnaround.
Joe?
I think they focused and relied too much on the COVID riches when you think about it. And they really didn't have the needed innovation. They're not really there with the obesity drugs. They had one drug that failed. So I think, unfortunately, there's been significant managerial missteps. They do have the acquisition of Seagen, a company that I've long talked about on the network and I owned previously. Ultimately, they'll realize the value of that acquisition. Mm-hmm. But the managerial missteps, I think, have been significant. And the interesting thing about this news this morning is you hear about the previous CEO, Ian Reid, being involved. And I think about Ian Reid, and I think about from 2010 to 2018, the stock performing remarkably well, Pfizer going through arguably one of its best periods in the last 20 years. So that's positive news. But I just go back to, OK, how does this company rediscover something beyond what they benefited from so significantly, which was revenue growth going from $42 billion to $100 billion.
Yeah, I mean, the pipeline was different, though, in the past under Mr. Reid. You can't just snap his fingers now with Jeff Smith at Starboard and come up with some new drugs.
No, you can't immediately. No, I agree with you. You're correct on that. You can't immediately do that, but you could be somewhat optimistic that maybe Ian Reid getting involved again will correct the direction of where right now this ship is going. And I think it's going in the wrong direction because your point, the pipeline doesn't appear to be rich. The pipeline doesn't appear to have the type of needed revenue driving drugs behind it. And the failure to be in an obesity drug for Pfizer, obviously they're being punished for that.
Barclays has changed the price targets of a number of biopharma names. AbbVie, target to 212 from 200, overweight the rating. Amgen, 315 from 300. Equal weight is the rating. And Merck goes down to a couple of bucks to 140 from 142. Bill, you own Amgen and AbbVie. What's your look?
Well, it's no secret that they're both trading a little bit expensive historically. But, I mean, I think AbbVie and what they have with Rinvoq and Skyrizi, we're expecting continued revenue growth through 2030. And the Humira, we're seeing continued scripts. I mean, it's been hitting revenue numbers better than expected. So I like the tailwinds there. Then there's a lot of wild cards at Amgen if they can have a GLP competition drug. But again, these names are a little pricey right now, though AbbVie is still a top name of ours, and we look at it as being a ballast in our portfolio. I like it at this level.
Anastasia, lastly to you. Some are talking about the great opportunities that exist in healthcare as an investment in the here and now. What do you think?
Yeah, I mean, I don't see a particularly strong macro catalyst for healthcare right now. I mean, obviously, lower rates do help some of the riskier trades like biotech. But generally, when you think about large cap pharma healthcare, you think of it as defensive. You think of it as having a dividend yield. And as we just discussed, well, I think actually the opportunity now is swinging to the cyclical side of the equation. So, you know, to kind of come back full circle to Brian's point, unless you can pick stocks in healthcare and pick them well, I don't think this has to be a sector that's overweight right now.